Hi everyone! This video will be about financial model of fast food business. If it's useful, please give us a like, subscribe our channel, push the bell button and leave us a comment. Also, you can order financial business models from scratch or download this model. The link to download is below this video. If you have a business idea of starting your own fast food business, this simple financial model can help you to evaluate the amount of money you need to start this business. Besides, you will also be able to see the profit, payback period of your investment, and profitability of your future operational activity. Of course, it will be very interesting for you to know how stable your business idea is if something happens with revenue or expenses. So now let's go through the model and I will show you what items you should pay attention to if you want to run this business. In our model, all inputs are colored in blue. Other cells are automatic. First of all, we enter the year when all our financial projections start. Then, we enter the year and months when we get the first revenue. Then we move to our menu. In this table of inputs, we mention all our meals. We can name all our burgers and sandwiches. We set the food cost margin for every meal in menu. Also, we have a switch on and switch off button for every meal so that you can see the profit and payback period of your business idea with or without this meal in menu. Now let's go to ingredients for our sandwiches and burgers. Here we have a list of ingredients. You can name each of them. Then we set the price per 1 unit of its metric. If we go to the right, we will be able to set the frequency we buy it. 1. Every month. 2. Once in 2 months. 4. Once in 4 months. 12. Once a year. Also, you can displace the purchase of this ingredient beforehand. 0. No displacement. 1. 1 month displacement. 6. 6 months displacement before you need it now. So now let's move to the recipes of our sandwiches and burgers. Here, from left to the right, we have our meals. From top to bottom, we have our ingredients, which we need to cook our meals. So now we set the amount of each ingredient in its natural metric needed to cook 1 meal. When it's done, we move to the sales plan. Here we have a typical week where we can put the sales plan for each meal for each day of the week. Then we move to the next block of input data. Here we specify the amount of Mondays, Tuesdays and other weekdays and holidays for each month to get total of the 365 days in the typical year. In the next block of inputs, we enter seasonal coefficients for revenue in typical year, where 100% is maximum. For example, our revenue can decrease in January and increase in September. When we start our fast food, we won't be able to get maximum revenue right at the first months. So we need to set up the pace of achieving our planned revenue. This is really very important block of inputs because it affects the appearance of operational losses. These operational losses appear during a time period when expenses are higher than the revenue. It's a period of reaching the break-even point. These losses must be added to the amount of money needed on the investment stage. Operational losses plus investment will give you the total amount of money needed to start your fast food business. Then we move to one of the main blocks of inputs, investment plan. The green column is the moment when we get the first revenue. Going to the past from starting the revenue, we describe our investment stage. Here we can specify what item we invest in, when we invest, and how much we invest. Then we describe people, their positions, salaries, amount of people on every position. Our fast food business also has some fixed costs which can be specified here. We've marked a typical year when you can put your fixed costs even if they have some seasonal fluctuations. Going ahead, we also have a depreciation table. If we have a depreciation for the investment item, we can set a depreciation status and specify the period of depreciation in months. The next block of inputs deals with taxes. You can set the tax rates and move to the cash flow statement, where you will see the results of financial modeling. Cash flow is the main statement where you see financial efficiency of your business idea. What valuable information can you get from this table? First, you can see the total revenue, direct and fixed costs, payroll, and taxes. Second, you can see your monthly profit and cumulative cash balance. Third, one of the main things you'll see from cash flow is total amount of money you need to start the business. If you see that total financing is bigger than amount of money you have, you can add a loan parameters. Amount of loan, month and year you get it, loan term in months, interest rate, and grace period for interest and body payment of the loan. After cash flow statement, we can see lines with profit and profitability. Then you can set a discount rate and look at the final financial efficiency parameters of your fast food business. Now we can see the graphic illustration of your business idea. Here we see in monthly detail, simple and discounted payback period, loan coverage ratio, revenue and total expenses, profit, profitability, cash balance, cumulative profit, operation profit, and loan payment. Then we have the same information done yearly. On the next Excel sheet, we have gathered yearly consolidated cash flow statement, profit loss statement, and main financial results of your fast food business. Finally, we see the financial efficiency of your fast food business idea. Is this model stable? What will happen to your business if revenue decreases or expenses rise? Now it's time to apply sensitivity analysis. Further, we have several Excel sheets where we test financial efficiency. We test the influence of such parameters as revenue, fixed and direct costs, payroll, investment, interest rate, and loan amount. How does it work? Let's go to the revenue sensitivity test. Here, we set the pace of increasing or decreasing the revenue. Then we push Sense button and see when our financial efficiency will go negative. Now we see how stable our fast food business model is. Plus, it's a great moment to rethink your business strategy and time before you start investment your money in business. Maybe it's a good time to return back to inputs and create new scenario which is more financially strong. The same story goes with all other blocks of sensitivity analysis. So, this was Fast Food Financial Business Model. You can download it. The link to download is below this video. If this video was useful to you, please give us a like, share it with your friends, subscribe our channel, push the bell button or leave us a comment. Also, you can ask us to prepare an individual financial model. Let's test your business idea. Stay tuned and bye-bye!